So over the course of the next 15 minutes, I will be going over the 3 E's for this upcoming week: earnings, election, economic data. I will give you a summary of each of these things and why they are important for the markets and how they're going to impact Tesla stock. We also have another big catalyst with Apple Intelligence. Apple Intelligence launches on Monday, and in my opinion, it's set up for disappointment. The last correction call that I made was on July 9th. I said I expected a 10% correction within the next 6 weeks. 5 days later, the S&P topped out and ended up falling about 9.7%. I missed the absolute bottom by 0.3%. But nonetheless, that was a beautiful call. On October 21st, just 5 days ago, I made the same call. I'm expecting a 10% correction within the next 6 weeks. And I think if we're going to get that correction, this week is where a lot of that starts. So I think it's actually going to start sooner rather than later. Really, I could have made this call for the next 3 weeks, but 6 weeks gives me a little bit more, I guess, wiggle room. Now, I just want to be clear. This is my opinion. My experience has led me to realize sometimes I'm early to things, but I'm usually not wrong. And if you're a long-term focused investor, you don't do any trading at all, who cares? You're going to be able to buy stocks at cheaper levels. If you are a trader, I still think there is an attractive opportunity to potentially hedge portfolios. I'm not a financial advisor. I'm not a financial planner. You can lose money. If you guys want to see the trades that I am making in real time, check out the link down below in the description of this video. With that said, I understand pretty much everyone's bullish right now. This is not something a lot of people want to hear, and it gives me 0 brownie points with the YouTube algorithm. It gives me 0 brownie points with the vast majority of the audience that watches these videos. But I am not afraid to share my thoughts in the hopes that if I am correct, if what I believe to be true actually happens, it will help you guys be better prepared to capture that opportunity, whether that is hedging your portfolio, whether that is, transferring money into a brokerage account to buy that dip or what have you. So here we go. Let's start with Apple Intelligence. Apple Intelligence launches on Monday. There's going to be 3 different waves of Apple Intelligence. The first features will launch this Monday. The next features will launch in December. And the more advanced Apple Intelligence will launch in March of 2025. That is currently the expectation. The problem is Wall Street is expecting Apple Intelligence is going to be pretty much as successful as ChatGPT in terms of getting the public used to AI, getting them using AI, getting millions of people, potentially hundreds of millions of people introduced to a new product. Nothing else has come along besides ChatGPT that has the expectation to actually do that. Now, that's important for a couple different reasons. The biggest one, though, if you are an equity investor, is the CapEx budgets that these big tech companies are spending on AI is crazy. Microsoft's expected to spend over $100 billion. Meta's expected to spend over $50 billion. Tesla's going to spend $11 billion within the next 12 months, let alone Apple, Google, Amazon, and their budgets are pretty similar, ranges, right? $50 to $100 billion a piece. The problem here is if Apple Intelligence is not as successful as ChatGPT, if it's moderately successful, or if it's a total flop, at least at first, you're going to start to bring up concerns about how long is AI investment that we're doing today going to take to actually see a return. That's the problem. That's where Wall Street may start to become more critical on this AI investing. Now, long-term, I believe Apple Intelligence has great prospects. It's going to be successful long-term. Let's not bet against that. In the near term, though, I don't think you're going to meet expectations. Now, how soon do we know that? Do we get indications of that coming Tuesday? or Wednesday or Thursday or at all next week? Is that going to take many months? I don't know. This could be a nothing event, or it could be a really bad event for Apple and for our markets. Apple is the second largest weighting in the S&P, right behind Microsoft. They're kind of neck and neck. They have been for 2 years now. But Apple is the largest weighting in the NASDAQ. So if Apple Intelligence flops, Apple's going to see significant downside, and that's a problem for the NASDAQ. And really that's going to cause downside in other big tech names. Now, Apple is up 45% since they announced the Apple Intelligence was going to launch this year. A lot of that, over $1 trillion worth of market cap gain that Apple has seen since April of this year, has been attributed to Apple Intelligence. So is Apple going to give that $1 trillion back if Apple Intelligence is a flop? Probably not. That's not how things work. But could Apple see a significant downside move if that does happen and Apple Intelligence is a flop? Absolutely. In fact, Apple has never been more expensive than today. Apple's not a growth stock. It's not. Apple has not grown in years. So you're really counting on Apple Intelligence to be a blockbuster as far as a new product to justify what Apple has already done. The stock market is a mechanism of discounting future profits and cash flows, right? So you've already discounted a lot of that into Apple, if not more than enough of that into Apple. And that's a concern that I have for this upcoming week. With that said, I don't know if we're going to have enough information to see if that's a flop or not, but it's not uncommon to see a buy the rumor, sell the news event with big products like this one, especially with AI. Think about this in terms of the Bitcoin ETF. Bitcoin rallied into that ETF approval. Once you got the approval, Bitcoin sold off like 20% because you were waiting for a big catalyst. That catalyst happened. And then what's next? What's the next big catalyst to look forward to? If there's nothing really there to look forward to, then that's when you get that buy the rumor, sell the news. And that is definitely possible this week. Next up, you have the election. Normally in election cycles, you would have already expected to see some kind of downside corrective behavior at this stage before the election. We are like 10 days away from the election, 9 days away from the election, more specifically. You would have expected to already see that downside price action. You have not yet. The bond market has seen a pricing in of the election, but stocks have not. If stocks do start to or will at all price in election risk, it will start to happen this week. I actually think that's part of why markets looked so bad on Friday. You gapped up initially in pre-market, you rallied for about an hour, and then you sold off and even sold off into the closing bell, and you sold off further in after hours, down 0.2%. This chart, let's just say you had no knowledge on the markets over the past 12 or 24 months. Just imagine you're brand new at investing. You hadn't looked at the history of the S&P. If you looked at this chart, you would say, that doesn't look good. Okay. Now, there wasn't a real reason why markets sold off to this extent. It just flipped out of seemingly nowhere. And yes, I think part of this is the election. So is the election going to be, think about this in simple terms, is the election coming in 9 days going to be a positive or negative catalyst for the markets this week? Clearly, it's going to be a negative catalyst or no catalyst at all. So the odds are pretty good that the election will have a negative impact on markets this upcoming week. Now, the second E here is earnings. Now, I will give you a brief overview of the earnings calendar, but first I want to just explain where we are. I've talked a lot about earnings revisions and earnings estimates coming down for this quarter, and that's true for the 493 stocks in the S&P. Excluding big tech, earnings estimates have come down a lot, and that's why you're seeing a lot of companies beat on earnings and rallying after earnings. But big tech names largely still have very elevated expectations. So it's one of those situations where you've priced in so much good news, these stocks have rallied so much that an okay or inline earnings is probably not going to be good enough. Now, some people would say Netflix had okay earnings, kind of inline earnings, and the stock went higher, and there was concerns that the consumer would pull back and there wouldn't be as many people signing up to Netflix, because Netflix is kind of consumer discretionary, right? It's not something you need, it's something you want, it's extracurricular, whereas, you know, some of these other big tech names are really not in that same camp. So Netflix did have a lower bar for earnings than your other big tech names reporting earnings this week. So here's the earnings calendar. I'll give you a brief rundown. Monday, you have onsemi, Philips, and Acadia. Monday and after hours, you have Ford, Cadence, Waste Management, and F5. Tuesday, pre-market, SoFi, PayPal, BP, McDonald's, Pfizer, Royal Caribbean, JetBlue, Crocs. Tuesday and after hours, you have AMD, which AMD and NVIDIA, their businesses are kind of totally different, right? NVIDIA's making most of their money from AI. AMD is not really there yet, okay? Hence why NVIDIA has 90+% market share of AI. But if AMD does fall historically, that negatively impacts NVIDIA as well. And I think that's a pretty interesting opportunity for this week. NVIDIA puts, because, NVIDIA doesn't report earnings yet. They're not expected to move much before earnings. And if AMD has bad earnings, big tech has bad earnings, generally speaking, cause downside, or election causes downside, or Apple Intelligence flops, that directly has a huge impact to NVIDIA. Because imagine that, again, like I said, if the markets start to question how long it's going to take for AI investment, the markets are going to start to question if companies should be investing as much into AI today, because perhaps it could take 3 to 5 to 10 years to see those investments pay off. Who is hurt the most by less capex from big tech companies, or less presumed capex from big tech companies for AI? NVIDIA. And I actually think NVIDIA options are priced very well for if we do see a correction. I think there could be an opportunity there. But nonetheless, if you guys want to see my trades, check out the link down below in the description of this video. You do have Alphabet, which is Google, Snapchat, Chipotle, Visa, First Solar, Reddit, and Chubb reporting Tuesday and after hours. Wednesday pre-market, Eli Lilly, Caterpillar, Humana, Biogen, ADP, and Jinko Solar. Wednesday, you have Microsoft, Meta, Coinbase, Robinhood, Sonova, Etsy, Riot, Roku, Carvana, and Starbucks that report in after hours. Thursday pre-market, you have Uber, Peloton, Merck, ConocoPhillips, SiriusXM, Altria, MasterCard, Estee Lauder, Kellanova, and Norwegian Cruise Line. Thursday and after hours, you have Amazon, Apple, Intel, Atlassian, and Friday pre-market, you have Fubo, Chevron, ExxonMobil, and Wayfair that will report. I gotta say, I'm nervous about big tech earnings. I'm nervous about the election. I'm very nervous about Apple Intelligence. Expectations are far too high there. Even if the thing is a success, you're not gonna know it right away, and you're probably gonna see a buy the rumor, sell the news situation anyways, in which I think you've seen a buy the rumor for 6 months now, and you're probably going to see a sell the news event on Monday, Tuesday, potentially next week. Just call it that. So I'm not super excited about those areas. The economic data, though, I think could be a positive area for markets this upcoming week. Now, it all depends, but I've held the same stance for a while now, that I don't think the government is going to let the economic data look bad before the election. So this week, you're still before the election. I think the data will come in good. And I'll give you a better rundown of this coming tomorrow. But your big data, you have JOLTS job openings on Tuesday. On Wednesday, you have, you do have big data on Wednesday. You do have the ADP employment change, I know for sure. But GDP growth rate, quarter over quarter, advanced status for Q3. Again, the ADP employment change. Expecting overall softer numbers for labor reports this upcoming week, so expectations are a little bit lower. On Thursday, you do have core PCE month over month, personal income, personal spending month over month. All of these I'm showing you are big market moving catalysts, like not the small catalyst, but big market moving catalyst. And then on November 1st, on Friday, you have non-farm payrolls and the unemployment rate. So I actually think if there's a positive surprise this week, it could be with the economic data. Now, is that a good thing at this point? I don't know. Okay, because TLT has been dying recently. Yields have been skyrocketing on the 10-year treasury. If the data comes in good and shows the economy is doing well, then you're going to see more pushback on Fed rate cuts, and you're going to see 10-year treasury yields go even higher, which is going to start pressuring the markets even more. So from the market standpoint, you probably want a little bit of weaker data this week to get 10-year treasury yields to fall and to relax the bond market. So it's like a catch 2022, right? Catch 22. If you have good economic data, bond yields go higher, bad for stocks, but good for stocks because the economy is good. If you have bad economic data, bad for stocks because the economy is getting worse, but good for stocks because bond yields are going to fall. It's a very weird situation with the economic data. If there is a positive surprise this week, I think it is with the economic data. But the economic data we get coming out on Friday will be the biggest, and that is obviously non-farm payrolls and the unemployment rate, in which surprisingly markets are expecting the unemployment rate will go up and non-farm payrolls will come in lower. So how does this all feed into Tesla? Now, Tesla actually accelerated into the close on Friday. That's a good sign. Tesla could take one of two approaches. Wall Street could buy Tesla if markets are weak, if Tesla continues on this strong strength we've seen. Tesla could be seen as kind of could become a crowded trade as far as the bull's perspective. If the markets do fall and Tesla goes higher, we've seen this before. Markets fall, certain stocks move higher, especially if there's just been a positive catalyst or, some good news, right? There's kind of crowding there. If a lot of stocks are declining and people see Tesla going up, they're like, hey, I'll just buy Tesla. Instead of trying to short the markets, I'll buy Tesla because Tesla's inversing the markets. Okay, so that's a possible outcome. Or Tesla sells off in line with the broader markets. I don't know what is going to happen, but I do know if we get above that 270 level, Tesla stock's going to run hard. Okay, if that happens early in the trading week, that is the signal. You get above 271, I want to be long Tesla. At these levels, I want to wait and see what happens, at least in the short term, if Tesla falls with the markets or catches a bid as the markets fall. So I think from the longer term perspective, who cares? Tesla falls, buy Tesla. Tesla goes up, buy Tesla. But in the very short term, I think the levels are critical. Above 271, I want to be long for a short term trade. Below 271, I want to wait and see what happens. Okay, if Tesla falls, do I want to short Tesla? Obviously not. Like, there's much better stocks to short. Short stocks with high expectations that fail to meet those expectations. Potentially Apple could be a good short. Nvidia could be a good short if we do go into a market decline. But with Tesla's earnings as good as they were, with the guidance as good as it was, you do not want to short Tesla. The risk to reward is not favorable. Even what we seen on Friday, Tesla actually accelerated into the close of the day when in fact the S&P did the opposite. The S&P, which you can see on screen now, sold off into the close, clearly downtrending. Tesla was clearly uptrending into the close. Like, these are very ninth grade economic, patterns that you're looking at here. Markets down, Tesla up. I would say that's a good sign heading into next week. Although I don't know the certainty of which that continuation will last, I can say it's a very good sign as of right now. So from that perspective, above 271, I want to be long short term. Below 271, I want to wait and see what happens. Wait out a potential correction. Hopefully get Tesla at lower levels. Tesla falls back to the 220s. That's a long spot. That's a spot you want to go long. Let's be honest. If you go from 267 to 220 with the momentum, with the strength we've seen recently in Tesla, markets are probably down 7 to 10% at that point. Because I think Tesla's going to outperform over the foreseeable future, over the next 12 months or longer, potentially. So that's just the way I'm looking at things. Let me know what you think down below in the comment section. If you did want to sell some calls, I think it would be a good opportunity to do so if we do sell off alongside the broader markets. If we do get rejected at that 270, 271 level and don't successfully break above there, I think selling some calls would make sense. But nonetheless, let me know what you think about this information down below in the comment section. How are you preparing your portfolio? Are you mad at me for calling out a correction? I think this is one of the easiest correction calls I've ever made, to be honest. There's just so many uncertainties, so much potential for bad news. And it's not going to take a lot to get the markets to get kind of fearful here with expectations. as high as they are. So again, let me know what you guys think about this down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.